What's up, guys? It's August 6th, 2025. We had a bit of a bull trend day and we went sideways. Nice trap right here. I got caught out a little bit. Took two trades. Oh, no, I took one and two trades, but the first two trades I took was a loser. It was NASDAQ. First trade I took was here. Then I exited as this bar was selling off because this bar was going to get a second piece and I would have got stopped out. Anyways, second trade I took was the opposite leg. That was fun. And this one I did take a full hit because I thought we were going to fail around this swing and sell off. Got stopped out 2 times in a row, but it is what it is. After that, I don't think I had to lose a trade. Let me see. Yeah. No, okay, yeah. So that's the trade I was in that I was losing to the short side. And then the next trade I took was a winner. Right here. This is my favorite type of trade, Filled and then exit within 1 to 2 bars. That worked out. I don't think I got filled on this one. Oh, I did. Okay, yep. So I took this one. It worked. This is the trade I didn't get filled on. This leg here. I gotta turn off these crosshairs. I used to like them, but I'm becoming not a fan of them. So here's this leg. Didn't get filled by a couple points, and it still hit the target. That happens. This leg here, I positioned a little bit smaller because in case we were in a trading range. They're short up here, they're short more down here. They got 50%, but they didn't make a bar under my entry, so I don't like that. That kind of tells me that trading range is coming soon, but then it still hit my target. I took one more trade. I don't know why I can't see it. Oh, it's this leg. Yeah, so it didn't get filled. I like this leg here because there was a gap and we're breaking out this trading range. Is this NASDAQ? Yeah. Again, I don't get filled, but then I see these 3 bars in a row. I was kind of skeptical. I went short on this. I took a smaller position on this trade because I already had a feeling we were going to be in a trading range soon. Bears get trapped right down here, right down here. Down here would have been the better pull, but I pulled from this bear bar. Bears get short down here. They're short up here. Get out a break even around this line. I got a little bit worried when I saw these 2 bear bars, but then this bar had a bad close, so I held on, and then my target was hit within these 2 bars, and I caught it. So 2 losses and 1, 2, no fill, 3, 4 trades. I'm up a decent amount today, so that's good. Again, I like to say I take trades around trap traders, but I do. I trade the 50% mark because that's where trap traders get out of break even. Something that I was thinking about on my way home from work yesterday. I was too tired to explain it in last night's video, but I told myself I'll talk about it today because I really want to start to. I wrote a note down. Transition to trading range is when one side is taking profits and the other side keeps averaging in. So that's what I kind of wrote down. And then I put channel to TR as that's what the topic's about. So we can do it right here. Bears get short here, they average in here, they average in here, and they average in here. Now bears are adding to their position, so shorts are piling up. While the trend progresses for the bulls, eventually they have to take profits, so bulls start scaling out of their position. And I think the lines are blurry, but anywhere where there's more traders taking a loss and averaging in, and when these traders have to take profits, I think that's when the trading range starts. How could I don't know if I'm explaining this correctly. So let's say these bears, they short here, they don't get out, and they short more up here. Because they have big accounts, so they can keep scaling it until the right. So bears are adding to their position. Even though it's a losing position, they're still adding to the selling pressure. At the same time bears are adding to the selling pressure, bulls are scaling out of a winning position. And right around after the second leg, so third, fourth leg, we know the probabilities change from with trend to trading range. So around the third or fourth leg, I think that there are more counter trend traders. I think the counter trend traders are equal to the with trend traders, and that's what gives us a range bound price action. So it's just a thought I had yesterday that I wanted to share with you guys because I'm really trying to pinpoint trap traders in each phase of the market cycle. So I've got to add again to the list of back tests. It's just growing. It's not shrinking, but one trade I would like to start taking is after 3 to 4 bars with a gap, I buy the close of the first opposite bar, go for 1-to-1, or maybe even 2-to-1. I'll have to see what the back testing says. I'm not gonna hold on. So this is just an example. I didn't take any of these trades today. I was just looking like how would they react. So this could be a winner, right? I buy the close of this, stop down here, and I don't know, maybe 1-to-1, 2-to-1. Maybe the first trade can be 2-to-1 and subsequent trades can be 1-to-1. But the idea is to catch the first second leg, and then after that I would trade 50% pullbacks. And then once I can spot the counter trend traders are adding to their position, maybe I start trading I1Rs in the trading range. So it would have worked also here. See, I buy the close. Well, I guess if I'm buying the close, my stop's like this. Buy the close. I go, and 1-to-1 would be the recent swing. 2-to-1 would be right around here. But the 50% pullback. Oh, did the 50% pullback work on this leg? Let me check. Yeah, the 50% pullback worked on this leg. So what I would be more inclined to do is buy the close of the first opposite bar. In this case, it's a bear bar, and go for 1-to-1, 2-to-1. Then this next leg will give me the 50% pullback, and then the final leg would be some sort of, rather than a 50% pullback, I'd be looking for a deep pullback, so I would trade like an I1R. So maybe in this leg, I'm expecting a deep pullback, so I trade this bar instead. Something like this, but I don't know. I don't know about that third one. I'm reaching, but look, it would work. I would be in the majority of this run up. Again, this is ideal conditions for a with trend trader anyways. So I have to do, the list just keeps growing. Anyways, let's do this breakdown. Hope you guys have been doing good. This is the first time I'm off this week, so I can actually sit down and talk to you guys. You guys will learn more about trap traders and how I'm trading and finding things. Hit the subscribe button if you want in-depth breakdowns of my trades. Hit the membership button, and I'll be posting more of that. I'm pretty excited for the future of where my trading career is headed. I've been pretty quiet about my job, but I ended up taking a new position somewhere else because I figured if I'm going to work full time, I should at least get the most bang for my buck. So I'll leave that up to your interpretation. But yeah, I am at a new job with better hours, not better hours, more hours. And I'm trying to push them into letting me only work nights. So for the rest of this week, I'll be working nights, which is nice. Because I can still trade the RTH session, and then I can do these breakdowns at a proper time, and then I'll be on my way to that job. And then I come back, sleep, work out, and day trade. I think it'd be an awesome schedule. I do that for a couple months while I build this automation robot out, and I'm not programming the actual robot. I'm just back testing, and I'll have more on that when I'm actually deploying it. Right now, I'm just studying it, and then next month I start a trade with me with Ali, and somewhere in between there, I'm gonna sign up for Randy's house psychology class. So pretty fun. I'm looking forward to doing the Ali thing because I already took the systematic class, so I know how to build systems, and as he teaches us new aspects of the market, I'll be able to deploy the things I learned last year within this class. So it's kind of I feel like I'm getting a little bit more bang for my buck. But anyways, yeah, that's what I got going on this next probably the next year or so. That's all I'm going to focus on is building out automation systems and taking price action classes with Ali. I was talking to ChatGPT about how can I get the most bang for my buck, and it had some really good things to say. I wish I had the script pulled up, but the gist of it was since I have a real job, I'm already having a stable income. I should delegate all my free waking moments to building an automated system, because where the hell did it said something very interesting, because pretty much it's comparing automation to another person working for me, so I could be at two places at once. So I'm trading a little bit less, but I'm more focused on that, because once that's up and running, I could probably cut my 9 to 5 out, or at least go part-time again. Anyways, I just wanted to give you guys an update while I got the time, because I know some of the breakdowns have been short, but when I do have the time, I want to do the 20-30 minute breakdowns. Anyways, bear bar closing out slow. It's today Tuesday? Today's Monday? Oh no. Today's Wednesday. Wow, my time's off. Yeah, so Wednesday we got half the week and we have a bull bar forming on the EMA. Bulls want to see a new high and make this nothing more than a deep pullback. Leg 1, pullback leg 2, pullback leg 3. And then if they make a new high in the weeks to come, they're going to look for a second leg. Bears are starting to get trapped. Yesterday I mentioned how each second leg that we can see here, and it looks like from today's price action, bulls are somewhat winning. Bears that short down here are going to short more on this bull bar and try and get out break even. They missed their break even opportunity by a few points, and then it rallies, and now their bulls got their 1-to-1. Leg 1, pullback leg 2. That's the first shallow target. They're going to want to go for 1-to-1 of this leg here, so they still got some space to go. So it'll be interesting times because I think we are in trading range, but I think we have a little more bullish pressure. It's hard to say. I think both sides can get a leg 1, leg 2 move, so that tells me we're in trading range. Bar 1 sells off and then rallies. It's a trading range bar, with bar 2 being a big bear bar closing on its low. Bar 3, bull bar closing. So bears are not trading range behavior, so traders are getting trapped. Bulls buy the high here and it sells off right away. They can get out at break even, but bulls believe it's a trading range, and look, they hold all the way to their bar 1 high, trading range high, and they start taking profits. Bears are short down here. Bears are short on bar 2. They short higher. Their break even price is right around here. But look, they make money on the tail of bar 5, and then that rallies, they buy back shorts. Now we have 3 bars in a row. What I don't like about these 3 bars in a row, I didn't take this trade. If I did, it would have been a winner. But I didn't like how the break even, the trap bears from bar 2 already got out on the tail of bar 5. 3 bars in a row, but there's a trend line break, so there wasn't as many trap traders as I would like. However, if a trader wanted to ignore this tail in this situation, it would have worked. Short here, short up here, you get filled on bar 6, and then rallies bar 7, leg 1, pullback leg 2, and then follow through with bar 8. Bar 9, bad follow through for the bulls, big bear bar closing on slow, and then 10 and 11, 3 bear bars closing on slow. Bulls are trapped up here. They're going to buy more, and you can actually see, even if I had to take, so bulls are trapped up here. They're going to buy more lower. Market starts to rally, and bar 14 becomes a breakout bar with a gap. Bulls are now making money above the 50% line. So because what the assumption would be is, and this is where I got trapped, bulls buy up here, they buy more down here, they get out at break even, and we get a leg 2 down. Instead, it breaks out with fall through 15, 16, 17. So bulls are making money above the 50% mark. So now I have to think trading range behavior. But then we get a breakout 18 through 25. So now we're in a trend. Well, we're not necessarily in an all-day trend, but the bulls are trending for a moment in time. Multiple gaps in a row. Shot to get a second leg. Three gaps. First pullback, bar 26. Big tail on 27. So bears that got short on 19 are going to start scaling in. You can say 21 is the tail because it's a tail, so bears did get short down there. Bears short here, they short higher. This line is their break-even price, 27, and then it rallies for a second leg, leg one, pullback leg 2. 3 bars in a row. I really do like 27 for up by the close bar, but it's the third leg, so I'm not really, so the context for buying close is not good, but from a very visual, like we take away just the visual perspective, it looks like a nice bar because it sells off and then rallies, trapping bears. Bears will be forced to buy back shorts or scale in. So bears can scale in. They short up here. They short up here. This is their 50%. Oh, this is. I was thinking, wait a minute, why didn't I get filled? This is the S&P. So on the S&P, this trade would have worked out. Bears short down here. They short more up here. Get filled on 39. Starts to rally, and eventually you hit your target on 56. there's still some trades going on here that we could take. And trades I wouldn't really be inclined to take, but look at here. I saw this one. Oh, I think on NASDAQ it would have passed. There's a bear spike from the tail of 38 to the low of 40. So bulls that bought the high of 38 are trapped. They're going to buy more down here. And look where the selling pressure starts, right around the 50% mark. So there's some resistance there for bulls because they're hitting out of a losing trade, the ones that bought up here. However, if they were stubborn and hold, they could go back to the original entry and make money. So double top, and you can see that's kind of where we started to go sideways. I swear on NASDAQ that short would have worked. No, I guess I'm tripping. Oh, yeah. I was looking at this short. I think I would have got stopped out. This is what I was looking at. 3 bars in a row. Bulls buy up here. Get filled at the 50% mark. Bar 38 would have stopped me out, and then would have went straight to target. I didn't take that short. I was just eyeballing it. On this one, the trader would have to hit out at some time for either small loss or small win, because the second leg, there's a tail on 30, there's a tail on 40, so you could say that's the second leg from the high of 38 to 39 low. But I would like to see an actual like tag, so like 1 pullback like 2. That's a counter trend trade, so I skipped that anyways. Then we have 3 bars in a row, 54 through 50, what is that, 56. Very short the low of 53. And you know the deal. They short more higher. Right around there. Maybe you get filled on 57. Actually, I hope you would get filled because it goes straight to target 61. And the trade kind of peters out. Bulls that buy up here, 61 high. They're going to try and scale in at the EMA or the swing around 57 low. I can do this. So bulls buy up here. They buy more lower. You can actually see they buy more here. 50% mark is tagged on 65. Quick leg down 66, and then the market rallies and goes sideways. Pretty straightforward day, I think. Trading range in the open. Rally for a couple hours, and then we go sideways again. So there were some good trades today. Let me know how you guys did. Hope you guys are doing well. If you learned something, share, show, don't be a hoe. And I will talk to you guys tomorrow. Hit me up in the Discord. A couple of you are taking some really nice leg 2 trades, so I'd love to see that. Thank you for your time, everyone. Have a good day. Bye.